Crypto markets are volatile, and price swings can be scary. But it's important to understand what drives them. The recent drop in Bitcoin and other major cryptocurrencies can be traced to several factors. One is the Bank of Japan's rate hikes, which impacted carry trades that use the yen to invest in higher-yielding assets like cryptocurrencies. 1. Fundamentals cryptography is math and science that makes it possible to pass information back and forth between parties without anyone spying or reading the message. It is at the heart of everything from bank transfers and computer passwords to online transactions. It is also the basis of cryptocurrencies such as Bitcoin, which operate on decentralized networks and are not backed by central banks or regulated by government bodies. Cryptocurrency prices have experienced extreme price fluctuations, sometimes soaring to record highs and then plummeting to dramatic lows. Investors in these digital assets can suffer major losses if they fail to understand and anticipate these price movements. The value of a cryptocurrency is determined by a combination of factors, including its scarcity and its perceived security. The price of a cryptocurrency may also fluctuate due to its market sentiment, which can be affected by both positive and negative press coverage. In addition, a cryptocurrency's value can be impacted by political and economic events. For example, if the economy starts to slow down, consumers will be less likely to spend money, which can cause a decline in the price of a cryptocurrency. This is because a cryptocurrency's value is based on consumer demand. A cryptocurrency's value can also be impacted by its use case. For example, some cryptocurrencies are used to facilitate remittance, a process in which migrants send money to their families back home. However, if a new government starts to restrict the remittance industry or introduces taxation laws that make it more expensive, the price of a cryptocurrency may drop. The fundamentals of cryptography are complex, and it is crucial to have a thorough understanding of these concepts before learning about specific applications. For example, in order to create secure communications, cryptography uses a system of encryption that transforms data into an unreadable format. This process is called ciphertext, and it is very difficult to crack. In fact, there are only about 3 billion combinations of letters and numbers that can be encoded to create a single ciphertext. This means that it would take more than 1 million computers working all day and night to try to break encryption with current technology. 2. Technology cryptocurrency is based on blockchain technology, which creates and stores digital records of transactions. These records are secured using cryptography, making them almost impossible to hack or alter. This has led to a growing demand for cryptocurrency, which can boost the price if more people want to buy it. However, the price of cryptocurrency is also influenced by other factors. For example, it can rise if new security measures are implemented or if the technology improves. Conversely, if there are security breaches or hacks, the price of a coin can drop. Another factor that can affect the price of cryptocurrency is its adoption by people and businesses. If more merchants accept crypto, it can drive demand and encourage investors to invest. This can lead to long-term increases in the price of cryptocurrencies. In addition, the prices of cryptocurrencies can be affected by news about regulation and wider market events. For example, if a country introduces favorable regulations for crypto investments, it can boost investor confidence and increase the value of cryptocurrency in that country. Conversely, if there are talks of a recession, it can decrease the value of crypto because people may be less inclined to invest in riskier assets. It's also important to note that there are thousands of different coins out there, all proclaiming to do the same thing, to become the next big mainstream form of payment. This can make it difficult to determine which ones are likely to succeed. Therefore, it's crucial to do your research before investing in any crypto. Also, be sure to diversify your portfolio so that you're not putting all of your eggs in one basket. Otherwise, you could lose money if the cryptocurrency you invested in crashes. Remember, you can always sell your coins if they lose value, but you'll only get back what you paid for them. This means that if you're not prepared to hold onto your crypto for the long term, you should only invest what you can afford to lose. 3. Regulation. The lack of regulation surrounding cryptocurrencies can lead to volatile prices. This volatility stems from many factors, including the risk of fraud and market manipulation. Investors may lose money when a cryptocurrency exchange crashes or the company that manages a crypto investment platform experiences problems. In addition, the price of a cryptocurrency can fall due to government regulations. For example, the SEC's aggressive stance toward Bitcoin and other cryptocurrencies has caused prices to fall in the past. Another factor is the fact that it's difficult to determine a fair value for a cryptocurrency, unlike stocks or commodities. This is because cryptocurrencies don't have cash flow and aren't as closely linked to an economy or industry as those assets are. However, it is possible to perform technical analysis on a cryptocurrency, which can help investors understand how its prices have varied in the past and whether there are any patterns that might indicate a bull or bear run. In addition, the booming popularity of cryptocurrencies has sparked interest in whether they should be regulated like traditional securities, such as stocks and bonds. As a result, the market is constantly changing and it's difficult for investors to know what type of regulatory framework will eventually be put in place. Because cryptocurrencies inspire passionate opinions, the beliefs and opinions of others can affect their prices. Some people think they are the future of money, while others worry that they're just a fad. Those beliefs can influence an investor's decision to buy or sell. Other factors that can affect the price of crypto include adoption and world events. For instance, when a big company or investment firm announces it's accepting crypto as payment for goods or services or buying it to hold in its reserves, that can increase its value. In addition, global events can also influence a cryptocurrency's price, especially when they impact other financial markets. For example, a recession could lower the price of crypto because it reduces the demand for riskier investments. This is why it's important to diversify your investments when it comes to cryptocurrencies. 4. Scams. Cryptocurrencies are relatively new and evolving, making them vulnerable to scams. A sudden increase in demand for a particular cryptocurrency can rapidly inflate its price, creating a bubble. When that bubble bursts due to negative news or investor sentiment, the value of the digital asset can drop dramatically. Additionally, fraudulent crypto exchanges and wallets can steal users' deposits or private keys, resulting in financial losses. To avoid falling victim to these scams, it is important to research a project before investing and to follow the advice of trusted sources. Another major factor that can affect the price of cryptocurrencies is their scalability. When a blockchain network becomes congested, transaction processing times slow down and fees increase. These problems can dampen the appeal of a cryptocurrency, potentially leading to market declines and prompting questions like, will crypto recover? Finally, the price of cryptocurrencies can be influenced by political events. As politicians clarify their stance on cryptocurrencies, investors may gain more confidence in the market and prices can stabilize. As a result, it is important to stay informed about the latest regulatory changes and technological innovations in the crypto space. Educating yourself through reliable publications, conferences and tutorials on educational platforms such as BitDegree can help you make wiser investment decisions. Cryptocurrency markets are more sensitive to sentiment than traditional investments, such as stocks and bonds. This makes them more susceptible to speculative bubbles, security breaches and market manipulation. During these times of fear, uncertainty and doubt, investors may sell to limit their losses. Additionally, tweets from influential figures or announcements from regulatory bodies can trigger a panic reaction from the market and lead to a sudden price drop.